First, just a thank you to Seoul National University and the organizers for putting together what has been, I think we can all agree, a really fascinating event today. I think, as was highlighted earlier, my background is very much on the financial services, the financial regulatory side, and that's where I'm going to focus in the context of this panel. I really want to pick up this idea of broader approaches to emerging technologies, particularly in the context of the financial sector. This idea of DLT, distributed ledger technology, and blockchain being one part of an ongoing process of digital transformation, which has been going on in the financial sector for a very long time, and then close with focusing, I think, on some of the issues that Michèle highlighted but didn't go into, and in particular, that is some of the financial regulatory issues around blockchain, but also in particular around one particular aspect, ICOs or initial coin offerings. And I guess I should say, the answer to the question about AI and the investment bankers is one thing that has happened over the past 10 years is that generally speaking in almost every developed jurisdiction, the financial institution is potentially liable in a variety of frameworks for whatever its staff may do. And so to a certain extent, it's irrelevant from the standpoint of the financial regulators that they are using AI. The question from the financial regulator is to the impact. Now, there may be a defense that we were using the technology in an appropriate way, but if the results are illegal, then that will not change just because of using AI. And it has to be said in the context of financial services, we do have an estimated $30 to $40 billion under management globally under independent AI funds. So we actually do have a number of funds that are being managed by independent AI systems, not under the day-to-day instruction of individual investment managers. So, starting point when we're thinking about cryptocurrencies, blockchain, DLT, is that this is just one aspect of a much wider process of digital financial transformation. And I think one thing that we have seen over the past 10 years, and remember that Bitcoin's advent was very much in the aftermath of the global financial crisis. Fundamental to the cyberpunk ideology is the idea of building an alternative to the formal financial system, which works better. And much of the impetus, though there was a long-term history, really came from the dramatic failures that many people saw in the context of the 2008 global financial crisis. But many of the impacts, not just of cryptocurrencies, but particularly of DLT and blockchain, are as a result of a longer-term process. And we look at fintech. Fintech today, in our analysis, really brings together four big trends. The first is a long-term digital transformation of wholesale financial markets. Best examples of this go back to the 1970s. NASDAQ, for instance, and if we think about high-frequency trading, if we think about securities markets today, human beings already are minorities, and in large markets, they are distinct minorities in the context of trading activity. Another example is in the context of payment systems, and Bitcoin is often posited as an example of an alternative form of payment system. If we look at today's global Forex markets, approximately $5.5 trillion is changing hands every day, much of it across digitized payment systems like SWIFT and CLS. Many of our new payment systems are fundamentally built on these long-term digital infrastructures. The second major trend, which has emerged over the past 10 years, are really fintech startups. And there has indeed been an explosion of new fintech startups all over the world. And I think this is fundamentally exciting because historically, research and development in finance has not been about coming up with new and better ways of doing things. Research historically in finance is sales. It is about coming up with products which you can better sell. And I think many of the fintech startups are exciting because they are actually looking at better ways of doing things. But even fintech startups are not new. PayPal, 20 years ago, was a fintech startup. Today, PayPal is a payments major. Bloomberg, 30 years ago, was a fintech startup. Bloomberg today is the most important information and trading intermediary in global markets. So that's our second trend, fintech startups. Our third trend, in many ways, is the one that I think is the most exciting. A digital transformation, particularly in emerging markets. This is something that largely started just over a decade in Kenya with mobile payment services, things like M-Pesa. But the best example today we find in China. China, if we look at Tencent, we look at Alibaba, we look at WeChat Pay, we look at Alipay. WeChat Pay, Alipay each have, depending on which estimates you want to look at, somewhere between 700 and 900 million active customers. They are turning over $2.5 trillion equivalent a quarter. This is a digital financial transformation of the world's largest country in a period of less than 10 years. And certainly in the context of our region, that is something that we are seeing taking place very rapidly. The World Bank produces every 3 years something called the Global Findex, which looks at financial inclusion. And in March of this year, it's often highlighted that there's still 1.7 billion people without access to a financial account. But over the previous 8 years, between 2010 and 2008, 1.1 billion people got access to a financial account for the first time. Where were those mainly located? Kenya, China, India. And this is something that across this region, as we see increasing penetration of smartphones in many jurisdictions, not Korea, but in many of the more developing jurisdictions, combined with inefficient financial systems, that sets the stage for transformations. The fourth brings together many of the things that we've been talking about across today. And it's really at the intersection of three different areas: data privacy, data protection, competition and antitrust policy, and financial regulation. And that is what we call TechFin. TechFin is about large tech companies entering into financial services. And if we look, for instance, at Amazon in the United States, Amazon is the second largest small business lender in the United States. If we look at Ant Financial in China, in addition to Alipay, it is the second largest consumer lender. It has hundreds of millions of financial services customers. And this entry of major tech firms into financial services is a major challenge. Now, all of this we can see as coming together in the implications and use of blockchain. Big changes from the standpoint of financial sector regulation. You move faster, and you have lots of new participants. When we think about financial regulation, we have four main objectives that often conflict with some of our other objectives: financial stability, preventing financial crises, supporting economic growth and financial inclusion, protecting market integrity from things like money laundering, criminal use of the financial system, and terrorist use of the financial system. And finally, consumer protection and fairness. And one of the biggest challenges of this impact of technology in finance has been things move much faster. And of course, in Korea, you've seen a brilliant example of that actually with Kakao and the growth of its financial services business in a very short period of time. So, how do financial regulators deal with this? From a policy perspective, prior to 2008, we had a very positive view of financial innovation. But that changed with the 2008 global crisis. There's a famous quote from Paul Volcker, former chairman of the US Federal Reserve, speaking in 2009, that the only important financial innovation he had seen in his lifetime was the ATM. Why? Because the ATM fundamentally changed people's lives in a positive way. And that was something that collateralized debt obligations and credit default swaps had not done. And so that has been one of the biggest challenges for fintech generally since the global crisis, but in particular for cryptocurrencies and likewise in the context of blockchain. Why? In the aftermath of the global crisis, regulators became very conservative. Now think about your traditional tech business. Tech business comes in and says, I want to disrupt existing systems and markets. Financial regulators, after 2008, said, we've been spending years trying to prevent disruption. We don't really want to encourage it, and therefore we're going to take a very conservative approach. I always joke with Bitcoin. Bitcoin, had it gone in and been presented to central bankers around the world as a secure cross-border electronic payment system, central bankers love secure cross-border electronic payment systems. But if you come in and say, we are going to replace you, well, central bankers don't necessarily like being replaced. And so you immediately have a negative reaction. But over the past 3 to 4 years, that's been nuancing a bit. And first, we saw some regulators doing nothing. China is often given example as a regulator which took a non-interventionist approach. But from 2015, that approach has changed. Why? Because many of the markets grew to such a significant importance that they became risks. And so we have seen efforts over the past 3 years, most recently in the context of mass failures in P2P lenders, to develop new regulatory frameworks. Other jurisdictions have been working in the context of developing experimental models, sandboxes, test and learn approaches, and finally, in the context of developing actual regulatory systems. And finally, probably in finance more than any place else, increasing use of technology for regulatory purposes. Digitization of reporting requirements in order to allow datafication, immediate analytics to achieve better regulatory outcomes as well as to reduce costs in industry. Blockchain. Now, the challenge here is that in many ways there are fundamental differences in view. And I think if we look at most of the financial services industry, where most of the activity is not in the high-profile, permissionless public systems like Bitcoin. Most of the activity in financial institutions and financial markets around the world is in private permissioned systems, where these are being developed as alternative platforms to better achieve existing operational structures. I think when we think about one of the areas that is of particular interest in the context of South Korea, this question of ICOs. ICOs are, of course, using blockchain for financing. It started out as financing blockchain initiatives, but with its explosion in sort of popularity, you people have used ICOs to finance just about anything. And the question then becomes, how do you address these sorts of things? And something that we've looked at a great deal at is essentially the idea that, like other forms of blockchain, from a financial services perspective, the key is not looking at the technology itself, but its application in different areas. And as a result, the key standpoint from legal design is designing principles-based systems which apply regardless of the technology. Now, in blockchain, one does need a certain level of private order. Why? Because every blockchain is not created equally. We have an article coming out on this very soon, and the student editors came back with a query. We had a statement that said, I can make a blockchain in less than an hour. And they said, no, you can't. And if you Google, you will find loads of courses create blockchain in an hour. So we had to change it. So not in less than an hour, but create a blockchain in an hour. And what that says is that the blockchain that I can create in an hour is not going to have many of the attributes that we say are fundamental to blockchain. And that means, from the standpoint of market development as well as dependability, there's a strong need for efforts like that of the ISO to develop systems for evaluation of different types of blockchains. Within that, from a financial services perspective, it then becomes the application. Are you using it for clearing and settlement? Are you using it for payment? Are you using it for fundraising? And if you're using it for fundraising, chances are that it should be regulated in similar ways to other means of fundraising. And I'll just close with 2 points. Point one is an example of this. Every securities law in the world requires some sort of registration for securities. Securities are always defined to include stocks, bonds, and debentures. Stocks, bonds, and debentures are financial technologies. Now, that is thus a technology-specific piece of legislation that limits its effectiveness in the context of technological innovation. And as a result, an increasing range of jurisdictions are looking at ways that legislation can be changed in order to be based on broader principles like market integrity or investor protection or financial stability, which can apply regardless of what the next new product is. Just to leave you with one last thing, in case you'd like a little bit more on finance, a link to what has definitely been Asia's first massive open online course on fintech, free on the EDX platform. Thank you.